Hi, my name is Chris Jackson. I am a business attorney. I've been one for over 25 years. Today, I'm going to answer a question I get a lot from my clients and also my YouTube followers, which is, hey, how do I pay myself from my LLC? You set up your LLC. You want to know, how do you pay yourself properly? This video is going to answer those questions. For example, can you just transfer money from the LLC bank account to your own personal bank account? Can you pay yourself, or should you pay yourself payroll? What if you've elected S Corporation tax status? This video is going to answer those questions and others, help you to remain IRS compliant, help you avoid some audit red flags, help you maintain your books properly, and most importantly, help you to retain limited liability status for your LLC. Real quickly, I just want to introduce my dog, Jax. Say hi, Jax. All right, so let's go ahead and get started right now. Okay, as you can see, I'm doing a whiteboard presentation here. I like to do this in some of my videos. Some people are more visual learners. I think in this video, it makes a lot of sense. So this is, of course, about how to pay yourself from your LLC. You've set up your LLC. How do you get that money from the LLC to yourself? It's an important question. And I'm going to go over four main topics here. Number one is payment methods by tax status. So some of the methods that are available to you and your LLC depend upon the tax classification of your LLC, which I'm going to go over momentarily. I'm going to give you some best practices to think about. I'm going to tell you what to avoid doing. We don't want to trigger an IRS audit. We want to make sure we are IRS compliant. And then also, bottom line, what's generally best for you. I cannot answer specifically what's best for you in your case. This is not legal advice or tax advice. I encourage you, as always, seek your own tax and legal counsel in your state for your own specific situation, but hopefully this video will give you some good information and a good basis upon which to ask questions from your own advisors. First topic is, as stated, payment methods by tax status of the LLC. There are four different possible tax classifications for your LLC. One is a sole proprietorship. So if you form a single member LLC and you do nothing else, you're going to be taxed as a sole proprietorship. If you have a multi-member LLC and you don't make any other tax election, you're going to be taxed as a partnership. If you choose to have either your single member LLC or your multi-member LLC elect to be taxed as an S corporation, we're going to talk about that in a little bit more detail. What are the benefits of that? I have a video that goes into that specific topic, the pros and cons of S Corp election and the timing of such election. I encourage you to watch that. We're going to talk about how you can pay yourself as an S Corp LLC. And then lastly, it's not very commonly used, but some LLCs, if they're thinking about growing their LLCs or bringing in investors, or they have long-term plans to raise money and they want to retain earnings, you may want to elect C Corp tax status. And then we'll go over the payment methods for C Corp LLCs. All right, so let's start with, as stated, LLC tax as a sole proprietorship. So if you have a single member LLC, you do nothing else, you're going to be taxed as a sole proprietorship. It's the default for single member LLCs. Option number one is what's called an owner's draw or a distribution. When you're using an LLC or referring to an LLC, the payment made from the LLC to the member, the owner, can be referred to either as an owner's draw or a distribution. I prefer to use the word distribution. You can use either, they're interchangeable. Question is, how do you make that happen? It's really simple. You have an LLC bank account, and I encourage you, and I've mentioned this in my other videos, for your LLC, you need a separate bank account for that LLC. In that LLC bank account, all LLC revenue should go into that bank account. All LLC expenses should go out of that bank account, be paid from that bank account. You do not want to commingle funds from your LLC account and your personal account. You don't want to pay personal expenses from your LLC bank account. If you're going to pay personal expenses from LLC funds, you first have to do a distribution or owner's draw from that LLC bank account to the personal bank account, and then pay those expenses that are personal expenses. And that's really your only option in an LLC that's taxed as a sole proprietorship. You do not pay yourself wages in this type of LLC. No payroll, no W-2 income to the owner member. You don't do that in either an LLC taxed as a sole proprietorship or a partnership. You just do the owner's draw or distribution, which is a transfer of money from your LLC bank account to your personal bank account. And we're going to talk about how much to transfer, how much to leave in, et cetera, a little bit later. Just remember that no matter what you're transferring to you, the owner member of the LLC, those are not tax deductible transfers. Okay. The income of the LLC passes through the LLC to you, and it's going to be reflected on your own tax return when you are taxed as a sole proprietorship. So the distributions that are made to you are not tax deductions, they're simply a transfer of money from the LLC bank account to your bank account. If you have an LLC taxed as a sole proprietorship, the profits of the LLC are subject to two different types of tax. Income tax, so you, the member of the LLC, if you own 100% because you're a single member LLC, 100% of the net income of that LLC is taxable to you as income tax. And also an LLC tax as a sole proprietorship is subject to self-employment tax of 15.3%. Okay, the next tax classification is an LLC that's taxed as a partnership. And as stated before, if you have a multi-member LLC, which is essentially more than one member in your LLC, by default, it will be taxed as a partnership unless you elect to have it taxed as an S corporation or a C corporation, which we're going to go over momentarily. But if you don't, you have two options on how to pay yourself as members of the LLC. First option is owner's draw and members distribution. That is exactly the same as an LLC tax as a sole proprietorship. You transfer money out as an owner's draw or member distribution to the members from the LLC bank account to your personal bank account. You can also do this by check. Okay, the second option in an LLC that's taxed as a partnership is guaranteed payments to partner or partners. So if you have a member that is active in the business in the day-to-day operation of the business, it's not a silent partner, this is an active partner, and you, the members, agree that this particular person or persons, if there's multiple members doing this, are entitled to certain guaranteed payments irrespective of the profitability of the company. You're going to pay that member or those members X amount per month or per quarter or per year, and you would want to put that in the operating agreement of the LLC. So there's no confusion about who's getting what and when. One thing to note about guaranteed payments to members is they are not tax deductible to the member that is receiving it because the member is receiving that money. So that member is taxed on whatever money is being paid to him or her. But they are tax deductible to the other members, to the LLC. It reduces the LLC's overall net taxable income. That guaranteed payment, however, will still be subject to self-employment tax. It's subject to income tax as to that member, but they are not wages. These are not wages. There's no W-2. There's no payroll deductions of Social Security and Medicare, and that's why it is subject to self-employment tax still. All right, a couple of other things to note about guaranteed payments. Number one, guaranteed payments are made even if not profitable. It doesn't matter whether the LLC is profitable or not. If you agree and you've guaranteed to give one of the members, say, $24,000 a year or $2,000 a month, you're going to make those payments irrespective of profitability. If that's not working out for the LLC, then the members can amend their operating agreement and agree to reduce the guaranteed payment to that member. And as discussed, this should all be addressed in the operating agreement so there's no confusion or discussion or dispute about who is getting what and when. Keep in mind that just like with an LLC that's taxed as a sole proprietorship, an LLC that is taxed as a partnership cannot pay any of the members' payroll. You can pay employees' payroll, just like in a single member LLC taxed as a sole proprietorship. If you have non-member employees, you can pay them payroll, but you cannot pay payroll to owners, members of LLCs taxed as a partnership or a sole proprietorship. And as stated above, with respect to an LLC taxed as a sole proprietorship, your income of the LLC, the net income, net taxable income, is subject to both a 15.3% self-employment tax and income tax to each individual member. All right, the next tax classification is an LLC tax as an S corporation. As stated before, I have a video that goes over this, the timing of when you have to make that election, and also what are the benefits, what are the drawbacks, what are the restrictions on electing to have your LLC taxed as an S corporation. Option number one for an LLC tax in the S corporation is, again, an owner's draw or member distribution. So just like the other two LLCs, you can make a draw or distribution to the member if it's a single member LLC taxed as an S corporation, or to the members if it's a multi-member LLC. Option number 2 is you have to pay yourself when you elect to have your LLC taxed as an S corporation. You have to pay the member or members that are active in the business a reasonable salary. As stated above, you cannot pay wages. No salary is allowed in LLC's tax as either a sole proprietorship or a partnership. In an S corporation, you must pay a reasonable salary. We're going to go over momentarily when it makes sense to have your LLC elect S corporation tax status, when it doesn't. But just remember that you can either transfer money as a distribution or owner's draw from the LLC bank account to a member bank account in an LLC tax and S corp, or you can pay a member or members wages. Those are the two methods by which you can pay yourself essentially from your LLC tax as an S corporation. Question then is, what is a reasonable salary and what are the benefits of S corp tax classification? So the answer is, I cannot give you an answer. It depends upon your industry and your job title for that LLC in that industry and what is normal. A good rule of thumb is say 30 to 60% of net projected income for the LLC should be paid to the member that's active in the business. So I'm going to give you a hypothetical, and we're going to assume that your LLC that's taxed as an S corporation is projected to make about $100,000 of net income. And let's assume that you elected to pay the member that is active in this LLC tax as an S corp $35,000 or 35% essentially of the $100,000 of net income, and the rest of the money will be paid as distributions. So you got $35,000 as wages and $65,000 as distributions owner's draw. Just note that an LLC that is taxed as an S corporation, only wages are subject to this 15.3% self-employment tax. So you should know, if you've received a paycheck before, that from your income you get certain deductions, Social Security and Medicare. So that 15.3% is the half of it is paid by the company and half of it is paid by you, the employee, and that's going to Uncle Sam from your paycheck. So to the extent that you are paying yourself wages from your LLC that's taxed as an S corporation, that's where the self-employment tax, that's where that 15.3% deduction gets taken, but it does not get taken against the distributions or owner's draw to the members. So unlike an LLC that is taxed as a sole proprietorship or a partnership, in this case, you're not subjecting the entire $100,000 to self-employment tax. You're just subjecting the $35,000 in wages to Social Security and Medicare, the self-employment tax portion. The $65,000 is not subject to the self-employment tax like it is with the other two tax classifications. That means essentially that in an S Corp, you're going to be paying, in this example, $5,355 in self-employment tax, which is the $35,000 in wages times 15.3%. $65,000 distributions will have no self-employment tax, only income tax. The LLC tax in S Corp in this hypothetical is going to save you $9,945 per year in self-employment tax by avoiding the self-employment tax and the $65,000 that you paid as a member distribution or owner's draw. Again, I cannot give you tax advice. You should work with your CPA to determine what is a reasonable salary for your job type, for your LLC, and your industry. And I gave you the rule of thumb. So take that for what it's worth, and it is not tax advice. All right, next up is an LLC that's taxed as a C corporation. Most small businesses are not going to elect to be taxed as a C corporation. So it's not very often, essentially, that an LLC elects to be taxed as a C corporation, but I will just make the point that, like an S corporation, you have to pay a reasonable salary to the members that are actively involved in the business. And the other way to transfer money from the C corporation to the members is through dividends. Just remember, your dividends are taxed. Your income is also taxed at the corporate level. All right, so those are the payment methods per tax classification. Next item is best practices. And number one, always use a separate bank account for your LLC. I addressed this, or I touched on this earlier. You want to make sure that you do not commingle funds. Okay, like I said, set up your LLC, open a bank account for your LLC right away. Stop spending money on the LLC from your personal account, and then keep all revenue of that LLC in that bank account. You're only going to transfer revenue to pay personal expenses from that bank account to your personal bank account per the methods we just discussed, depending upon the tax classification of your LLC. All expenses of your LLC after you set up the bank account need to come out of the LLC bank account, not from you personally. I've covered this in other videos, and also it's in my next steps guide, which goes into great detail about all of this and other best practices. But you really want to make sure that going forward, after you've opened your LLC bank account, that the expenses you incur have to be paid through the LLC bank account, or you have a credit card that is designated exclusively for your LLC. You can go get a personal credit card. Your LLC is not going to have credit. Just make sure you're not using that for personal purposes. You're using it only for the LLC. So that way you can track your LLC's expenses and have that credit card paid from the LLC bank account. So essentially don't commingle funds, which is what we just talked about. And why is this important? You want to separate the LLC as a legal entity from yourself personally. It's important for the purposes of preventing a plaintiff in a lawsuit from piercing what's called the corporate veil, or in this case, the LLC veil of protection, the limited liability protection that an LLC provides you. One way to do this, and there are lots of ways to do this, but one of the ways it's important is you don't commingle funds. Another best practice is to label all your payments. So you want to label your payments to make sure for bookkeeping purposes, you are addressing them as they should be addressed. What I do, for example, is in my bank account, and you can use the same. Some people recommend having different banks for your personal account versus your business account. You can do that. I do that in some cases. Other cases, I use the same bank. I just have separate accounts. And whether I'm transferring it to a bank account within the same bank or to another personal account at a different bank, I always label that transfer as member distribution, for example. Obviously, wages are going to be labeled as wages are going to come out of your bank account in most cases, and it's going to be clear that those are wages being paid to you. If not, label them. If you want to keep a separate book, separate from your bank account memos, I encourage you to do that. Or if you're doing it in QuickBooks, etc., make sure you label these distributions or wages or guaranteed payments to partner appropriately. Lastly, and this is very important, don't drain the LLC bank account. You're going to have certain expenses like taxes, for example, that you're going to have to pay, sometimes quarterly, sometimes at the end of the year, sometimes both. You don't want to drain the bank account. You want to keep your LLC adequately capitalized. So don't drain the bank account because you're going to have taxes you need to pay. You're also going to have expenses, as I mentioned. You want to make sure that the LLC has enough funds to meet projected normal expenses. If it doesn't, then it's going to be considered not adequately capitalized. If this happens really early on after you formed an LLC, this can weigh against you. If it happens later because of unforeseen circumstances, it may not matter as much, but another element of being able to pierce the veil of protection of your LLC that a plaintiff may claim is that the LLC doesn't have the funds to meet its own expenses. So make sure you're not making too many distributions to yourself that the LLC cannot pay its bills. You also may need emergency cash. There are unforeseen circumstances, both in a business context and our personal lives, where we weren't expecting to pay for a certain thing. It just popped up and now we have to pay it, and we have to make sure we should have a reserve of cash so the LLC can meet its expenses, can pay its taxes, can address emergencies, and then the extent to which you want to retain funds in the LLC bank account so that you can have those funds to expand or grow, you should do that. Just note that in the context of an LLC taxed as a sole proprietorship or a partnership or as an S Corp, you're going to be paying taxes whether you're making distributions of those funds or not. I may have mentioned this earlier, but essentially, just because you're leaving cash in your bank account in the LLC doesn't mean that cash is not subject to tax. You got to pay the tax based on your net income, not how much cash is in your bank account. So that's why you want to leave money in there to pay your taxes. Okay, so the question is, how much should you set aside to pay taxes? And I don't know what that answer is, but as a general principle, most people recommend 25 to 35% of profits quarterly or annually. All right, so the next item is when to elect S Corp tax status. And this does not apply to everyone, okay? Should go watch my video that I made. There are certain restrictions on who can be a member of an S Corp, so that needs to be addressed. Also, there's certain types of businesses that you don't want to have your LLC elect S Corp tax status for. For example, real estate holding companies or operating companies that own real estate. Got to be very careful about electing S Corp tax status there. You may lose certain tax benefits. Talk to your CPA about it and have your CPA answer this question as well. But as a general principle, once you start making 50, 75,000 or more per year, it may make sense for you to have your LLC elect S Corp tax status, and then you're going to start saving on self-employment tax. All right, number 3 is what to avoid doing. And the first item is don't pay yourself wages if you are taxing your LLC as a partnership or a sole proprietorship. You can't do it. IRS doesn't allow it. You're going to get an audit most likely or get penalties. You don't want to do that. Avoid that at all costs. Just keep in mind you can pay non-members who are employees, but just don't pay yourself as a member. Next up, not running payroll after S Corp tax status. So make sure if you choose to elect to have your LLC taxed as an S corporation, you got to pay yourself payroll, a reasonable salary. Like I said, discuss that with your CPA. Just be ready to do it. Set up your payroll provider almost in advance or right after you elect S Corp tax status. Understand how you're going to pay payroll. I personally use QuickBooks to manage my books, also my payroll. I also have a 401k account with Guideline, which is working with QuickBooks is very easy to integrate. I have a company match from my LLC and also my professional corporation. So there's an additional tax deduction. So the company will put money into my 401k. All right, as stated above several times because it's important, you don't want to commingle funds. Don't use the LLC as your own personal bank account or piggy bank. Don't pay your personal expenses out of the LLC. Make sure that you first, if you have personal expenses and you need those to be paid from LLC funds, assuming your LLC is adequately capitalized, you're setting aside money for taxes and expenses, etc. Pay yourself distributions or wages or whatever works in that specific tax classification into your personal account, and then pay your personal expenses from your personal account. And as stated, the LLC bank account should be used exclusively to receive customer client income and to pay LLC expenses and to pay credit cards that are tied to LLC expenses. All right, number 4 is what to do. What's the bottom line? What I generally recommend, again, not tax advice, but if you are eligible and it makes sense for you to elect S corporation tax status, you may want to wait until you're making sufficient net income to do that, say $50,000 or more as a general rule, because you're going to save on self-employment taxes. It is going to cost a little bit more in terms of expenses. When you elect S Corp tax status, you have to file a separate tax return for the S corporation, as opposed to just a Schedule C on your personal tax return. So you may have some additional fees there, some additional complexities because you're setting up payroll, additional CPA fees depending upon your CPA. So just keep that in mind. Before that, as stated, just stick with owner's draws and distributions. Keep it simple. If you have a multi-member LLC and one member is working harder than others, you may want to have that member to induce them and encourage them to continue to work hard and to incentivize them to have the best results for your LLC. Have them receive guaranteed payments. And if you're trying to raise money or you're trying to retain earnings so you can reinvest or grow the business, maybe an LLC taxed as a C corporation makes sense. In most cases, it does not, but discuss this with your CPA. So as you can see, paying yourself from your LLC is not just about moving money from here to there. It's about protecting your LLC. It's about minimizing taxes. It's about staying IRS compliant. With that said, if you have any questions about this video and the content, go ahead and put them in the comments section. I get to those on a regular basis. I also have a next steps guide that goes into greater detail and outlines all of these concepts with examples. I'll put the link to that underneath this video. If you like this video, I ask you to kindly give me the thumbs up. And if you want more content like this on a regular basis, I ask you please subscribe to my channel. For that, I say thank you, and I wish you and your LLC and your business all the best. Have a great day.